Can you be an active trader and still follow Warren Buffett's investing principles? I'm going to bring in Simpler Trading's Danielle Shay to and Danielle, I want to just get your thoughts on that Buffett letter I saw where you said newer investors particularly could take a lot away from it.
I do think that newer investors can take a lot away from it because what Warren Buffett does is he picks strong businesses and holds onto them for a long time, especially for newer investors right now with the suppressed market. It's a great time to look at and identify strong businesses that they can hold for a long time at a depressed price.
What about some of the Buffett principles that do you incorporate some of these sort of Buffett-like principles in your own work?
Yes, definitely I do. I love to pick up stocks of companies that I love the products. That's something that he's always mentioned. I also like looking at companies that have increasing EPS and revenue numbers, particularly increasing dividends. Companies like these that are backbones of the American economy are going to be around regardless of what bull or bear market we're in. So when I look at long-term stock picks, I absolutely use some of these principles.
Yeah, the dividend aristocrats. So let's talk about earnings season is wrapping up. The results have come in like really below consensus, which, by the way, is very, very rare. What do you think? Why hasn't it really had this sort of impact on this market? I mean, could it have been built in before earnings season?
Yes, definitely. I think that we went into this earnings season knowing that we weren't going to see really strong numbers, but I would actually argue that, we have pulled back after earnings season. If we look at where we were going into Amazon and Microsoft earnings season, we pulled back a little bit, but you know what, Charles, I think more of the pain is coming now because we've already broken through that 4,000 level in the S&P. And so I think that we're going to see that continued downside as a result of this quarter.
Well, we got a couple of earnings, though, this week that are pretty big. I'm going to ask you about two. Costco traded lower in the weeks after the last two earnings releases. And so is this one that you like here? Is this one that's still worth a shot?
Yes, Charles, and I will know that Costco normally does fall a little bit on earnings because Costco has incredibly thin margins, and so it's pretty normal that it will fall slightly because there's not a lot of ways that they can incredibly increase their results. So the reason why I like Costco is because if you look at it on a long-term basis, it has a beautiful weekly chart pattern. We have increased dividends. We have consolidation that's ready to break out. And I think that ultimately that consolidation will break out in the direction of the trend, which is higher. And long term, it'll take us up to $650 a share.
Yeah, and it's hard to believe that Costco, even if it's down a week after earnings, will stay down, right? We're talking about Costco.
Yes, exactly.
It's like Costco. Who the hell sells Costco? Broadcom. Now, this has been a beast. It has made huge moves in the week after it's reported for the last couple of years. Can this continue?
Yes, Charles, and this is one that I like for a long-term pick and also for a trade, particularly because, like you note, it will make big moves after earnings. So if we look at the earnings history on this stock over the last 12 quarters, it's traded higher 10 of the last 12 times, especially last quarter. It had a positive breakaway gap. Right now, we're consolidating on the daily chart, and I think that ultimately, because of the EPS increases that we've seen and because of the revenue increases that we've seen, the stock is going to continue going higher, and we could make it up to about $750 a share ultimately on a long-term basis.
Wow. Well, you've been hot, Danielle. I can't wait to see how this one plays out. Talk to you again real soon. Thank you.
Thank you.
All right, folks, coming up, my takeaway on the American consumer: never down and out until they're down and out. We'll be right back.